But first, Anthony Albanese plans to ram his controversial tax changes through the Parliament, just rushing them in before any consultation, before they can be properly scrutinised by parliamentary inquiries. The momentum is growing in a powerful campaign to force the Albanese government to drop its capital gains tax on businesses and shares. And there's even been an extraordinary intervention from New South Wales Premier Chris MINS about how Australians are effectively working half the week for the federal government.
Well, look, I mean, whether it's in this budget or it's in the future, we do need to make sure that we're doing everything we can to hand more money back to working Australians. The top marginal rate of 47%, as I said in Parliament last week, you're working Monday, Tuesday and half of Wednesday for yourself, and then Wednesday, Thursday and Friday for the government. That's, it's a tough burden for a lot of families to hit.
And he said urgent action on income tax is needed. Urgent. And putting it like that, the way he did in terms of the days of the week, it really paints a picture for Australians about just how much tax they're paying to the Albanese government. Opposition leader Angus Taylor has already, as you know, pledged to index the personal income tax thresholds to inflation to stop bracket creep. And this is a major ideological difference between the coalition and Labor, or at least federal Labor under Albanese. The far-left Albanese government would never consider indexing tax thresholds with inflation because it reduces the tax revenue and prevents their ability to continue spending. Labor is currently able to take more of your money in taxes simply because of bracket creep. And Albanese has always been a far-left figure. I mean, think how he joined the protests against Israel. And then there's his personal push for death taxes just a few years before he entered politics. And as Prime Minister, Albanese has shaped the country in his image. A big immigration agenda, recognising a Palestinian state, bringing in thousands from Gaza, and now this irresponsible, radical left economic agenda that is anti-business, anti-aspiration and anti-investment.
Treasurer Jim Chalmers just handed down what he called the most important budget in decades. And if you are a business owner, a share market investor, or anyone who has ever sold an asset and enjoyed a tax discount on the profit, congratulations, the government has some significant news for you. The headline change out of the 2026 federal budget is this. The government will replace the 50% capital gains tax discount with a discount based on inflation, and introduce a minimum 30% tax on capital gains from the 1st of July 2027. That is a fundamental shift in how investment profits are taxed in this country, and the response from the business community has been fast, pointed, and very organized. Welcome to Federal Analysis. Let us break this down properly, because the details matter here and there is a lot of noise drowning out the actual substance. A growing campaign led by young startup founders has emerged, claiming Labor's move to reduce the 50% capital gains discount will effectively double their tax bill when they sell their companies. 40 business owners under 40 signed an open letter to the Prime Minister expressing their concerns directly. That is not a fringe reaction. That is a coordinated, substantive response from people with genuine skin in the game, and it is exactly the kind of organized pressure that tends to get political attention. Now here is where the government's position gets interesting, because Treasurer Chalmers has not simply shrugged this off. Chalmers pushed back on what he described as misinformation fueling the backlash, pointing out that small businesses would still be able to access for existing concessions and carve-outs that critics were not acknowledging in their analysis. That is a fair counter-argument, and it is worth understanding before forming a view. The changes are not a flat removal of all concessions. There are carve-outs, grandfathering provisions, and specific protections built into the design. But the opposition is not letting this sit quietly. Shadow Treasurer Tim Wilson jumped on the campaign against the changes, and the coalition under Angus Taylor has framed this as a government choosing to reach into the pockets of investors and entrepreneurs at exactly the moment when economic confidence needs support, not headwinds. The government has framed the reforms as a package aimed at improving housing affordability and supporting younger Australians, noting the changes are still proposals and are not yet law. The policy intent is clear. Use the tax system to redirect investment toward productive activity, particularly new housing. Whether that intent translates into the outcomes promised is the question that economists, accountants, and investors are actively debating right now. This is a live, developing story, and there is a lot more to unpack as the legislation takes shape. If you want sharp, daily breakdowns of exactly what is happening in Australian federal politics, the policy details, the political manoeuvring, and what it all means for ordinary Australians, subscribe to Federal Analysis and drop a comment below with your take on the CGT changes. We read everything, and this debate is genuinely worth having.